The US dollar is finally showing some signs of strength. Hello traders, this is Fawad Razak, market analyst for City Index. And the greenback is coming back today on the back of weekly jobless claims, which came in slightly better than expected, falling for the fourth consecutive week now, showing a little bit of a trend, suggesting that the jobs market is perhaps holding better than market have been expecting. And we saw that with the non-farm payrolls report last week as well, didn't we? Which came in better than expected. And with the inflationary impact of Trump's tariffs and his spending plans and tax cuts to come, perhaps inflation is going to stick around longer than markets expect. And as a result, the US dollar is showing some signs of a recovery. Now looking at the dollar index here, it is still printing lower lows and lower highs. So it's still not out of the woods yet, but we have seen signs of bullish momentum picking up in selected currency pairs. So let's have a look at a few of those. Compared to the other major currency pairs, the dollar yen first bottomed out in April, and since then it has been showing some signs of strength, creating higher lows. And recently it dropped to test this area of support at around 142 to 142.80, which held, and that moved the price back above this broken trend line. So that was the first sign of bears getting trapped, and as a result we've seen the currency pair squeeze higher. Now it's interesting where we are at the moment, because 146 was a former support and resistance level. This level was also the head of this inverted hammer candle, if you like. That level should have held as resistance upon a retest from beneath if the trend was still bearish, but the fact that we've moved above it now suggests that the path of least resistance is indeed to the upside, and that the sellers are getting trapped. So if that's the case, where is price most likely to head to? Well, levels where trapped traders will be placing their stop loss orders, wouldn't it? So from here, the high from the day before comes in at 147.18, the inverted hammer from yesterday. So immediately, I think there will be some stops resting above that level, which could be a target for the bulls. Above it, the high of this interesting looking candle comes in at 148.03. So that could be the next stop until we get to this longer term area of resistance between 148.65 to 150. This area shaded in red, where we also have the 200-day moving average converging as well. So it looks like the path of least resistance is to the upside on the dollar yen, and other currency pairs are starting to show bullish characteristics as well, including the dollar CAD. Now the dollar CAD is quite interesting because it is coming off of a major support area. If we look at the weekly chart first, the area between 135 to 136 marks the prior support zone from where it took off last time back in September of last year. That rally was quite relentless before the market topped out and eventually came back to retest this area, and it's now bouncing back from this zone. So keep an eye on this area, because the dollar CAD could be carving out a major bottom here. Now looking at the daily chart of the dollar CAD, you can see that there's a bearish trend line coming into focus here, which is being tested at the time of this recording. So we could well see a potential break above it in the not too distant future. If we do go above it, then at that point we will have created a first sign of a reversal, if you like. Already we've had a slightly higher low here compared to the June 16 low. Whether or not that is a genuine low remains to be seen, but we do need to see a clean break above this bearish trend line for confirmation. If that happens, then from there we could go to 138, 139, and possibly all the way to 140 at some point in the near future. But we'll cross that bridge if and when we get there. For now, the key question is, can the dollar CAD rise above this area of resistance? In terms of economic news, we don't have major data coming up from the US in the next couple of days, but inflation data next week is going to be key. That could potentially determine the near-term path for the dollar, because if inflation comes in hotter than expected, then that could lower expectations for a September rate cut. For more market updates and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.